Hey, this is Jason with In Sold We Trust, back again with the September market report. I'll also give you a gift at the end, so be sure to stay tuned and look for that gift. This is part 1 of 2, and in this part 1, we'll take a look at a more national coverage as well as some really important subjects that I recommend you to watch till the end of the video. In part 2, we'll dive deeper into the local cities with numerical values. Before we proceed, I just want us to take a moment in remembering all the families and all those people that lost their lives that day on 9/11. I know those families are going through this every year. It's a moment of time in America when it was our greatest tragedy, but it's also a time a great heroism that was extracted among civilians and first responders. Let's remember how valuable they are to us, to our safety and well-being. It's important that we do not forget. Let's dive into the market update. Looking at every category, whether it's a new listings taken, active listings, or total listings count, we can see that we are below the normal values from the year 2017, 2018, and 2019. Now, what does this tell us? We need more inventory. Yes, you may have heard about the shortage in the inventory here and there, perhaps on the news. Today, we are going to take a deep dive into the current inventory situation and really dig in to the importance of really knowing your equity. When the inventory is less, it's typically a better time to sell simply because there's less competition. But that usually means better prices and less contingencies. There's a quote by Doug Duncan, who's a senior vice president and chief economist at Fannie Mae. He said, "It's easy to run your forecast ship aground by underestimating the American consumer." Now, what does this mean? Well, a lot of people seeing the reporting about the inventory dropping, they're thinking we are going to tank and have challenging years coming forward where we are not going to be able to sell houses. It's easy to run your forecast ship aground by underestimating the American consumer because we saw an anomaly last week, very unusual. Even though we are facing inventory shortage, we witnessed an unusual uptake in newly listed homes compared to July. This may hopefully signal a return of seller activity in the market as we head into the fall, which is typically the best time to buy a home. Now let's visualize this. You can see the gray bar hovering over July and August. For the past 7 years, the new listings number actually went down starting July. Of course, this could have happened before the 7 years, but we are going to focus on the past 7 years because that's the data that is given to us. So what you are seeing right now is very unusual. There was an uptick, and we don't know if that uptick will continue or not in the next few months, but perhaps we are seeing the sellers willing to dive into the market. They're saying, hey, you know what? I've waited enough. I don't care about the mortgage rate. I have plenty of options. And this is what we will also cover today. That uptick shows us hope in sellers willing to put their houses in the market. They're thinking, hey, if I want to start a new year somewhere else with a different job, different part of the country, now's the time to get the house on the market. Now, what's one thing that's keeping you hesitant in doing so? Maybe it's the mortgage rate, which is about 7% right now, but you can see that the majority of existing mortgages are well below that number. In fact, 70.7% of mortgages are under 4%, and adding another point, 91% of all mortgages are under 5%. And it's going to be challenging for someone who has a 5% mortgage rates to go and buy a house that's with a 7.5% interest rate. You can also visualize this in a pie chart. We can see that people under 3%, shown by the blood red, are really unlikely to sell houses unless there's a lifestyle change. And people between 3 and 4%, they're probably not going to sell. And if they're between 4 and 5%, they have to really think about selling. Between 5 and 6, they are probably going to sell. And if you're above 6%, you are probably ready to make the move. So just by looking at this, we can see why we are facing shortages in the inventory, and this is just from the people that have existing mortgages. A recent survey shows that mortgage rates are less relevant to older homeowners. If you look at the left side, 1 in 4 US homeowners say mortgage rates would not impact their decision to sell their home. Of the 26% of homeowners, 43% says it's because they would not need a mortgage to buy a new home. They can go out and proceed in buying a house if they wanted to, because mortgage rates would not impact them. And this is heavily skewed towards baby boomers. Baby boomers are not afraid of taking out mortgages than any other generation. And why is that? The answer is that they have a tremendous amount of equity in their home. How much? Well, let's take a look at this graph. The dark green showing a 38.7% represents the amount of people in the country right now that own their home free and clear, meaning they don't have any mortgages on it. Followed by 30% of people have more than 50% equity in their home. So for them, if their house is worth, let's say $500,000, they have $250,000 in equity. 20.8% have between 30 and 50% equity. The blue line are people that have between 10 and 30%. Orange line is between 0 and 9%, and people with negative equity after all calculations is 0.12%. So there is a tremendous amount of equity in the country right now. So combining two numbers, 68.7% of homeowners in the country either does not have a mortgage or have at least 50% equity in the home. These are big numbers, and this is likely a huge savings account for them. This data came out recently. The average US homeowners now have more than $290,000 in equity, which is significantly higher from $182,000 before the pandemic, because as you know, prices really have shot up. From 2010 to 2021, people with mortgages withdrew just under 1% of available tappable equity each quarter. This is important because of what happened back in 2006. People were refinancing multiple times as their equity went up and up and up. And where did they spend the money? On depreciating assets like, let's say, a brand new car or jet skis, or go on these lavish vacations. So people were trading appreciating for a depreciating asset. Now we learned from that from 2010 to 2021. You may be asking, why am I talking about equity? Well, it's because a lot of people still do not know how much prices have gone up. Here are 10 metros that outline the price increase since 2020. Dallas had a remarkable 56% increase in price since 2020. If you bought a home here in Dallas for $100,000, now it's worth $156,000. Here's a map showing the equity from 1991 to 2023. So by this time, if you had a 30-year mortgage, they would have been paid off, and now you are sitting on a tremendous equity. Texas is at 335.6% increase, which is higher than the national average. And here's another view outlining the past 5 years. Texas had a 55.8% increase. Now, what can you do with this equity? We know that 38% of all first-time homebuyers under 30 years old are getting help from their parent or a family member. That help is coming from their parents' home. You could use the equity to perhaps, let's say, pay off a student loan if you need to, or maybe invest in a new business. There is a lot of reasons why you need to know how much equity you have and what options there are because of that equity. So what does equity have power in terms of making a move? Well, let's go over the 3 big advantages that they have over someone without equity. Number 1, their ability as a cash buyer. There's not going to be a mortgage payment, and the seller is more inclined to accept offers that are cash offers. They don't have to worry about what the mortgage rates are, and they are probably going to get a better deal in the house because they are cash buyers. Second advantage is the ability to give larger down payment, and this results in a lower monthly payment and a better loan term, which will include more favorable private mortgage insurance cost. Now, number 3, access to assisted living residence. Whether you are making payments or buying into an assisted living facility, the cash proceeds after the sale of your home dramatically increases your options. So one arsenal that I would like to offer you is a free professional equity assessment report, or what I would like to call it, a PAIR. And this will outline what this report is about and give you an understanding of your current equity of your home so that you're not coming into the market blind and you have full power over your equity. If you would like this free assessment, simply reach out to me. Call me, text me, email me. All my contact information is down below, and I will get this over to you so you can have full control over your equity. I hope you found this video helpful in keeping fit with your real estate. This channel is projected for you, so if there's an idea you'd like to share, comments or suggestions, please let me know in the comments down below, as I hope to grow with you and be able to deliver the answers to your questions and strengthen your knowledge as homeowners or as future homeowners. Now be sure to wait for part 2 of 2 that's coming out soon for local data. Thank you for watching, and if you haven't subscribed, click that like button as well as subscribe to get all of my up-to-date information at the tip of your fingers. I'll see you in the next video. God bless you guys, and happy hunting.